Good morning, everyone. First of all, a really warm welcome to this session. Before we start officially with the introduction, I would love to say what a year it has been for digital assets. We started in the US with spot Bitcoin ETF approvals, and then we started seeing other regions following the same path, Hong Kong being the latest one. We saw Bitcoin hitting an all-time high. We saw institutional adoption and massive inflows. But it is really important to understand what the future might look like. And to discuss that, we have our esteemed panel, and we would like to start with the introduction. First of all, Marion, please.
Very glad to be there. Thank you very much, Bilal. So Marion Laboure, I'm a managing director at Deutsche Bank. I work as a senior economist in the research team, and I'm responsible for fintech and payment research. And in addition to that, I'm lecturing economics and finance at Harvard.
Good morning. My name is Florian Rais. I'm the founder of Criptonite Asset Management, the co-founder of the Wave Group. We all come from traditional finance, and we all had one thing that happened to us about 7 years ago, in the sense that this new asset class should not be treated differently than other asset class has been treated in the past, and therefore we need to bring to the investment community products, expertise, understanding, knowledge, and we need to surround ourselves with the best in class. So that's what we're trying to do in this ecosystem. So today we manage about north of $1.5 billion. We're spread in two groups. We are SEC regulated Wave Digital Assets based in Los Angeles, and we are Criptonite Asset Management regulated by FINMA in Switzerland.
Thank you, Najam.
Good morning, everybody. My name is Dr. Kidwai. I'm the co-founder of C1 Holdings. I've been involved in digital assets since 2016. We did the world's first crypto SPAC, which we listed on NASDAQ in 2021. We have a $500 million fund investing in digital asset secondaries. And later this year, we're launching the C130, which will be the first closed-ended fund listed on a US mainland exchange, which will give investors access to the top 30 privately held crypto companies.
Well, thanks for the introduction, everyone. Marion, I would like to start with you. Institutions are known for allocating time to assets that they believe have the potential to go big in the future. From an institutional perspective, how much time and resources the institutions are giving to Bitcoin and other crypto assets?
Yeah, that's a great question, and what is very clear is like cryptocurrencies manage to survive for two crypto winters, so they are here to stay. And Deutsche Bank has been working on that. So we are developing a custody solution. We are working on asset tokenization. We are also building euro-denominated stablecoins. So clearly, we are in the space. In terms of research, so we are covering digital assets. So we are looking at the trends, the market. Our clients, corporate clients, institutional clients are also asking questions. And they feel like, I would say 2-3 years ago, the question was more, what is this, what's coming next, and so on, but more like on the curiosity side. And last year, we had not so many questions, and since late 2023, earlier this year, clearly we had many more questions. And what's very interesting is like if you look at the long-term trends, for example, if I take even like 2017, one Bitcoin was just like $1,000. If we look at what happened recently, especially during the COVID area, in 2021, we had a lot of liquidity in the sector, very, very low interest rates. So people were looking, both consumers and institutional, were looking to invest in more risky assets to get higher yields. So it has created a lot of upward pressure on crypto prices. In 2022, we had exactly the reverse setup with higher interest rates, higher inflation. People started to invest more in traditional asset classes, and crypto prices, Bitcoin prices, declined sharply. So all this bubble that we had during the COVID era was mainly partly explained to macroeconomic factors. Now we are in a very different context since late 2023. I mean, clearly we are on an upward trajectory, and we believe that prices will remain elevated for a few reasons. First, we had the ETF approval in January. We had Bitcoin halving a few days ago that put also additional pressure on prices. We might have even more ETF approved for the spot Ethereum quite soon. This year, it's a big year as well for regulation in Europe with MiCA. And the last factor that is also playing in favor of prices is probably in June, we might have the ECB and the Bank of England decreasing interest rates, and maybe a December cut by the Fed as well.
And Florian, now we are seeing all the biggest asset managers in the world just entering the world of digital assets. That wasn't the case if we talk about a couple of years ago. You have been in this market for the last few years. Please tell us what has changed in terms of perception of all these big players in the market about digital assets.
Right. So the perception of it, in our opinion, has completely changed for the better. But you know, the traditional asset managers today are considering this asset class. But if we say that they are entered into this asset class, I think it's a little bit too fast. There is different things that happen. First of all, the level of understanding of crypto and blockchain in general is still extremely low. And it goes back to education. And this is the role of exactly in the similar way what happened with internet and .com. A lot of this, and I was at the time the head of the investment office here in London for a Swiss private bank. And during this internet, we could see that there was a willingness to enter into the asset class because clients were asking for it. But the bank itself was not really ready to give proper advice, or they were not feeling confident or comfortable to produce reasonable or adequate advice. So that's exactly where we are today. The banks now need to find a way to say we need to structure ourselves to be able to advise our clients. This is step number one. The ETF, of course, has brought a lot of attention to the asset class, which is very good. We have been waiting for this for a long time. But for us, as the question was, where do we see our role in this evolution? I mean, a few years back, people were asking us, why don't you want to do ETFs or trackers? And at the time, we were thinking the problem with ETF, I mean, vanguard of crypto is going to be vanguard. I mean, as I said before, ironically, this is the only one who didn't do it. But, trackers and ETFs is a matter of distribution network. So it's not really about an expertise network. And it's a race to zero in terms of fees. We prefer to say, okay, we want to be hands in the hood, saying we want to generate yield on holders of crypto. That's why we manage treasury for protocols, but we manage money also for miners, for whales, for anyone who holds crypto, because we were starting from our belief that we saw in traditional assets. People will access an asset, they will hold it, but then they want to have a yield on it, because that's the reason they will hold it for a long time. If you hold an asset only because it has an increase in prices, that's not enough. You want to have return on this asset. So we decided to start being hopefully important in deploying assets in DeFi, but also in derivatives, and that's where we are generating yields for holders of crypto. This is where we see our role. Our role is not to take clients from TradFi institutions, but rather to provide TradFi institutions with an expertise that we've built over the years, and actually help them to help their clients. This is really what we want to do, and this is what we do. We're based in Switzerland. I'm Swiss myself. Therefore, we try to work with financial institutions and banks in the country to achieve this expertise.
Yeah, another question for you is that now we're seeing all these big names coming. What sort of advantages, like early mover advantages, native crypto firms have in terms of asset management over the firms who are coming here now?
I think that the first mover advantage is really to say this is the first time in the history of financial markets that there is an asset class that has been created from the retail, because this asset class started with the retail. Therefore, institutions and traditional firms are not fit. It doesn't mean that they don't understand. Eventually, they will, like everything. But the system, the way they approach new asset class is a little bit disturbed by this fact that it's brought by the retail. Therefore, they had a time to adapt, to say, you cannot, as a CIO of a large institution back in the years, you could not admit that the next asset class you want to invest in is coming from retail investors, spread around the world. So our first mover advantage came from what? We kind of structured, or we put some structure into this knowledge of what is crypto, what is blockchain, what is the use case of it, what is it? 6 years of track record, it takes 6 years. So basically, it will take some time for firms and people to adapt to it. And we think that we have a very strong role to play in the next 3-4 years, because we can share and we can put to work what we've learned from the past years. And working with protocols closely allows us to be, let's say, really inside the engine.
And Naj, you have been an investor in the digital asset space for some years now. What sort of changes have you seen in the recent years as an investor in the crypto world?
I think just one quick question. Who actually owns crypto here? Wow.
You have your answer.
That's quite a higher number. And how many people bought in the last 12 months? Honestly, so about half of that, right? So the great news is that, crypto is here to stay, right, as an asset class, right? And I think what we've seen in the last several years, it really started off driven by retail and speculation. So, the ICO sort of boom came along in 2017, then that imploded. And then the market went through a fairly challenging period, and then 2020, 2021 came along, and Bitcoin did its thing again, right? And we saw all-time highs. And then the last couple of years have also been quite challenging for this industry. But it seems like, the ETF was really, it took 10 years for that to get approved. So it wasn't like BlackRock woke up one day and sort of said, like, we're going to get this approved. It took a long, long time to get there. So I think what we're seeing is that there's a lot of talent now coming into this industry. If you look at what is really hot in the world right now, it's artificial intelligence and it's digital assets, right? And I think if you ask graduates today where do they want to go and where do they want to hang out, that's the place where they want to hang out. So I think, as Florian was saying, the dot-com boom, nobody wanted to go into management consultancy, investment banking, everybody wanted to go and do a startup. So what we are seeing is that there is maturity coming into this space, there is talent coming into this space, but ultimately you have to have utility, right? You have to build something that people actually want. So a lot of the meme coins, right, that sort of, do 1,000x, and maybe some of us have invested in those in the past, that's not real utility, right? So the question here is, real-world assets, tokenization of everything is up for grabs. So every aspect of financial markets, financial services, is going to change. And I think for the last several years, or particularly the last couple of years, people are building infrastructure to solve those issues. So you have now wallets and custodians and exchanges and custody that are institutional grade, right, that will work with Fidelity and BlackRock and Franklin Templeton. So we're seeing a lot more talent coming in. User experience is getting better for a lot of these products and services. So earlier, actually getting onto an exchange, opening an account, moving crypto around was incredibly challenging. Now you have platforms like Coinbase that make that really simple. And I think mass market adoption, it's nice to see in London, like, nearly 3/4 of this audience own crypto, right? Maybe this time next year, everybody will have exposure to digital assets. So I think what we are seeing as investors, we look for quality in management teams, right? I think that's important. So before it was like, the guy with the hoodie and he was sort of doing his thing, that's changed, right? And I think you're getting much more talent coming into this industry. Regulation and compliance and risk is incredibly important in this space. So I think for institutions to get in, they need that comfort, right, that these things are regulated and they're structured. And I think the US has missed out on that somewhat, right, because of the lack of clarity of rules. And that has benefited other jurisdictions, particularly places, I live in Dubai, so like UAE has taken the lead in that space, right? Japan, Singapore, Hong Kong. So those markets have also taken advantage, I think, of some of that slowdown in the US and lack of clarity.
You were talking about different regions taking a lead. Would you like to elaborate that a bit more? We all know what's happening in the US. There are different challenges, and other regions in Asia and the Middle East, they're taking a lead. Please explain a bit more in that regards.
So, having lived in Dubai for 14 years, we've seen a lot of change, but literally, I think COVID was a big driver of that. So a lot of talent actually moved from Hong Kong, from Singapore, from Japan, restricted where COVID restrictions were tough, to our part of the world. And I think maybe some people in the audience won't know is that we had over $400 billion of OTC trading out of the UAE in the last year alone. It's the third largest market globally. There's 10 million people live in that geography, right? So when you think about those numbers, it's a huge market opportunity. And I think where the Dubai government and Abu Dhabi has done a really good job is at least they've provided a clarity of framework, right? So you have companies now like Deribit and Binance and many other exchanges actually making the UAE their home because there is clarity of rule and law. Japan also is doing good work in that regard, right, for regulation. Look at Hong Kong, right, has also taken a lead. First Ethereum ETF went live today in Hong Kong. And you'll see Australia just announced that they're also going to be doing spot Bitcoin ETFs. Brazil is also moving into this space. So I think it's been a missed opportunity for the US. And also the UK, I think, is slowly starting to wake up to the fact that there is a huge opportunity in digital assets. And, we've got ETNs coming later this year here as well.
Florian, would you like to shed some light on what's happening across Europe?
Across Europe?
Yes.
Yeah, I think that, I share entirely what's been said. I mean, Switzerland was, we started to have an approach with crypto that was a little bit a counterintuitive for the Swiss government in a sense that, Switzerland has not been known as being a, a pioneer into deciding something first. But because it was touching finance, it was touching a lot of what is very core to the Swiss mind and habits, they decided to jump in. But the regulator in Switzerland, we have to say, a little bit like the UAE one, which we have also experienced, you have a dialogue. And that is the key of everything, because you have something that nobody's 10 years ago knew. Then you have something that you grow into knowing more about it. And the role of a regulator, if he doesn't get a dialogue with those who are actively developing or involved into this asset class, where does he get his knowledge from? What is I'm not saying that SEC doesn't have talented people, but what message does it give out when you are so tough on the whole industry, when your own lawyers are being forced out because they've been, recently they've been forced out because they were seen as being, biased in judging cases. The most important things is people are no longer coming to you to discuss. They're avoiding you. So basically, they go somewhere else to advise and train someone else. So that's what the shift in people and talent, unfortunately, yes, it has been a little bit away from the US. I believe it will change, but that's my personal opinion. But it is true that in Europe, for once, and in Switzerland in particular, the approach was much more constructive. The regulator in Switzerland, they call us sometimes and more to say, what do you think about this? What do you think we should do? Where is it going? So I really hope that this trend and habit will not change.
And Marion, you travel a lot to the US for your academia commitments. When you talk to people, what they think, we all know SEC stance, but we all know what's happening in the US. from regulatory perspective, but what people think about digital assets there?
So that's a very good question, and actually, what they think it's exactly what is reflected in our survey. So we conducted a huge survey. So we interviewed like over 4,000 Americans, but also like Spanish, French, Italian, German, and British people, and we had like a very surprising result. 50% of consumers believe that crypto asset is here to stay and will become a method of payments by the end of the year. Less than 5% believe that it's just a fad that is going to disappear, so very few people. And what I'm very surprised when you talk about retail investors is like when you ask people what they think about the price of Bitcoin, we have still a third of consumers who continue to believe that by the end of the year, Bitcoin will be lower than 20,000. And I'm still very surprised. And actually, when you ask people, most people are saying that. And when you interviewed people, you see it in the stats. And it was exactly similar stats that we got in our December survey, that we got in our March survey.
So, and I want to have your opinion from all of you. Where do you see the digital asset market by the end of 2024? I'm not asking specifically from price perspective. You feel free to give your price prediction if you really want to. But in terms of regulation, policy making, adoption, institution, where do you see the digital asset space by the end of 2024? So
you can really see like a democratization of digital assets that really started in the corporate world. And the ETF was obviously a big milestone. And when you look at the net inflows, clearly, I mean, it took 2 months to reach $10 billion for the ETF, while it took 10 years for gold. So clearly, we are seeing a democratization of digital assets. And regulation is also one more step in that direction. Regulation, I clearly see it as a net positive for the industry. Great to have a clearer framework. And if we have more regulation, we should also have like more adoption from the corporate sector. And if we have more adoption, we have more liquidity. And obviously, we might have lower volatility in the medium term.
Florian?
Well, as I agree with all what Marion was saying, and not going to repeat, I'm not going to risk myself in the price prediction. But one thing that fascinates me always is, the parallel with gold and Bitcoin, right? And a lot of the bankers that say, look, everybody understands what gold is, no one really understands what Bitcoin is. Well, let's keep this in mind. There are 3 billion gamers on the planet. For 3 billion people, you don't need to explain what digital ownership is. They know that. They have it every day. They use it in their games, in their mind. Their mind is set. You're talking about a crowd of 20-year-olds that tomorrow will be 40. And those are actual long-term owner of Bitcoin. 21 million Bitcoin will be mined. Approximately 30% is lost forever. We know that. So 15 million Bitcoins, right? Gold is approximately $15 trillion market today, approximately. 15 million Bitcoins, million apiece, 15 trillion, would sound reasonable if you have such a large community that will be Bitcoin holder in the future. So that's my 2 cents on the price.
Naj?
Florian, I hope so. And I know we have Tim in the audience who's been quoting 250. Are you sticking with that? Okay. So I'd call it, we're going to see in excess of 100K for sure, right, by the end of 2024. And more clarity, more regulation, less risk is all going to drive that to hopefully that price.
Well, thank you very much for your insightful views, and thank you very much for staying with us.
Thank you.
Thank you.